Okay, so it's all been a culmination of my journey over 40 years. For 25 of those years, I was a trader at some of the world's top investment banks here in London. And then for the last 15 years, I've been working as a performance coach with traders and also sometimes with people connected to trading in leadership roles, management roles, and a few people outside of the financial markets as well. And that's taught me a hell of a lot about people doing the job from their perspective as well, which I can then relate to my perspective. And my own perspectives as a trader on that 25-year journey was really a journey of two halves. The first half, when I was, I think like a lot of young traders, periods of success and thinking I was doing really well, and then other periods where I fell flat on my face and it was a total disaster. You're caught on that emotional roller coaster, that journey between triumph and struggle. I think about halfway through my career, I started to lose perhaps confidence in myself, self-belief my way a little bit. And then I was just very fortunate to work with a performance coach, to be put into a performance coaching program. Actually, he was an executive coach, so it's a very similar concept. And that started me on a journey of self-discovery about who I was as a risk taker, how that worked out in the way I took risk and engaged with markets, and how I approached the entire job of trading. And the years after that were significantly more successful, significantly more profitable, sustainably consistent, certainly not stress-free, because I don't think this is a job that, stress-free and trading, those two terms don't go together. But it was complete transition for me post that coaching. And it was during a conversation with that same coach about 10 years later that he planted the seed in my head of working as a performance coach. And I started down that journey, learning executive coaching, the same form that he did, studying various forms of psychotherapy over a probably close to 10-year period, whilst working as a coach, developing my coaching, working with traders from all backgrounds, all roles, all markets, and helping them make significant transformations in their performance. And then about 7 years ago, I used to tweet and blog about my thoughts about the mental side of trading, the mental challenges of trying to achieve success, the battle with yourself. And I was approached by a publisher who'd been reading some of my tweets and blogs, and he said, "I think you've got a book in you. When you're ready for it, let us know, and we can work on it." And then that started during the obviously things went a little bit quiet in 2020 during the COVID years, and that felt like the time to start working on it, and that became the book, Mastering the Mental Game of Trading. Well, there's a lot of advice put out there about you need to be this, you need to be that, you need to do it this way, you need to do it that way. Actually, I've found every single successful trader has their own style, their own way of doing it. They normally fall into different categories. Some will always use a certain method or approach or set of behaviors, but other ones will do completely the opposite. So trying to find these common strands are not necessarily easy. But one thing I do notice over time, and this again is not personality related, so it's not a case of being risk averse or highly risk tolerant or calm and unemotional or highly emotional. It's nothing to do with that. It's working in alignment with who you are, being comfortable with who you are, having a great relationship with yourself, and letting go of the negative impacts of ego, whilst also actually building upon the positive aspects of ego, because it's not just a negative relationship we have with our ego, and letting go of some of a lot of the inhibitions that we have that hold us back. And I always say the greatest superpower I come across amongst all the most successful traders is their incredible ability to let go, which is a theme I talk about in the book. And let go is, it sounds like a throwaway line. Sometimes it sounds like a bit of psychobabble. So I go very deep into what letting go is. But that they are masters of it. And that then enables them to really leverage the ideas, the systems and methods they use, the approaches they use. Because you get lots of people using the same approach, but only very few actually making money from it. It's both of those things, because they're all combined. It's often, like I said, it's letting go of being owned by your ego and allowing your ego responses to control your trading. So when you say, you take in a belief, say that the Fed are going to do this, or that inflation is going to do this, or that this company's stock price is going to soar or plummet, and you allow that belief to take hold of you. And when you meet the very best traders, okay, they often use a mantra of strong beliefs loosely held. And that's one example of letting go. Being able to just look at your belief, not let it become part of you, but just let go of it and review it. The same with outcomes. When you talk about outcomes, when mastery really does happen, it's just letting go of the greatest outcomes or baddest outcomes, because it's also good outcomes that take hold of us and can corrupt us. So when you look at great sports people, and there is so much to be seen from reading sports biographies, okay, the most successful people, they let go of failure, and they also let go of triumph. They move on and they get back to their process and what they need to do. They don't let it own them. And you can watch some of the most incredible performances from, athletes in sport, in football, in basketball, in boxing. They might have had a great win or a bad outcome, but they're back, and you're like, how do they do that? They're back in the next game doing it. And you thought either they'd have been corrupted by that, or, disturbed by it such that they couldn't sort of repair and reset and start again in the best way possible. Right. Okay. So the book itself is built around the performance process cycle, which is something I came up with, but the original concept came from a certain field of psychotherapy that I studied. And then as I was studying it and seeing this framework, I was thinking, yeah, that's a performance framework. That relates to anything in performance, and I've already got a lot of feedback already by people saying, the message of this book works in any field of performance. But the process cycle itself is this idea that whenever you do something, whenever you make a decision, when you make a choice, when you do an action, when you do a set of actions, they all follow this certain structure around a process, and they all get to this point of the performance, where you actually do the task, where you make the decision or a choice. And that task could be a single task, it could be a large task like managing a portfolio, so many tasks put together. But it starts with getting yourself in the right state. So it starts with, and there's working in the background, there's what I call the 3 Ps of high performance: purpose, process, presence. Those 3 are interconnected. You have to have a clear sense of purpose. You have to know your why. Okay, you have to know the reason you're doing this. Okay, and then once you have that and you've got clarity about it, and also that's a good reason, it's a wholesome reason. It's not an ego-led reason. Okay, once you have that, saying that, ego, there's good sides to ego as well. I always try to make that clear. But once you have that, you then have a direction. Okay, a lot of people set goals and aim towards goals without a purpose. Okay, and that often means those goals are unlikely to be achieved, or they're going to be a struggle. When you start with a purpose and you let your goals emerge from them, those goals are far more likely to be achieved. So we start with purpose. Then we have to understand, how are we going to achieve that purpose? What are the steps we're going to do? So you're not just looking at what it is, but you then ask, start with why, and you go to how. And then you go to what. How am I going to achieve that? And then what do I do to achieve that? And when you think of trading, that's how your playbook emerges. That's how your system and your method emerges. And it's a process of continual emergence as you adapt and you evolve those playbooks that you use every time you trade. And the playbooks usually exist in your head. Sometimes people systemize them or they write them down. But there are a series of structures and steps. And we'll come back to the playbook in a minute. But you start with that purpose, and then you start with the first quadrant of the performance process cycle. Think of it like a circle. If you look at the front cover of the book, you'll see that circle. And that first quadrant is the being phase. And that's really a psychological phase. That's about getting yourself in the right state mentally and physically and psychologically, so that you are there without bias, you are there with clarity, you are there with coherence, and you're asking the right questions. I call it detached curiosity. You're curious, but you're not detached to anything that happened previously, to any biases, any ego, any old views. And as you do that, you are immersing yourself physically in the markets. Okay? You are sitting there, you're looking at the price action, the news, the research, the stories, the comments that other people are making, all the information that is coming through. And maybe you're looking at the charts, maybe you're looking at, sort of opinion pieces. Okay? Maybe you're responding to a need to adjust or hedge something that's in your portfolio. But you are in the right frame, you've got that clarity. It's almost like coming into work on 1 Jan. Nothing, you've taken off 2 weeks, you're clear, you're looking at everything. You want to be like that at the start of every day, every trade, every idea, as much as possible. It's impossible to be completely like that, but you want to get as close to that state as possible. Kind of call it an ideal state. Okay, and that's before you even start trading or coming up with an idea or having a view. Okay, you just allow it to come to you. Okay, then we move to the second phase, which is the production phase of the cycle. And a trigger event has taken you in there. Now that could be a piece of data, an economic release, maybe a pattern you've noticed on the chart, a break of a level. Okay, could be a comment you heard from a colleague or something you read on social media or a news report. It could be you just reflecting on everything you're doing, right? And thinking, and having these aha moments. Okay, so that comes to you, and then you start going through a process of sense making. So up to then you've been sensing the market. Now you're starting to make sense of it, and you come up with a story or an idea, something you might want to do, something you have to do sometimes. Okay, and at that point the idea really comes to you. There is a possibility of something here, and this could be a second by second reaction. This whole process could be taking place in seconds. It could be taking place in weeks, made up with many of those steps in it. But you're now coming up with a narrative, an idea, a response, something you feel you have to do. Okay? And that is where the idea for a trade starts to come, or a hedge, or even cutting something out. And then you're now matching that to your playbook. Okay? You bring your playbook in. Okay? Can I do this? Is it viable? Is this a trade I want to take? Does it fit my playbook? Does it fit my style? You might have quite simply a 5-to-1 risk reward that you aim for on every single trade. Okay, and you might say, well, it's a great idea, but it's not 5-to-1. Okay, and at that point you're not going to act. And that is the decision you've taken. Doesn't mean the cycle's finished, because your choice is not to act. Another one might be, yeah, that's great, I'm going to act, but when and where? How does your playbook guide you into that? Could be that you just you don't have a 5-to-1 risk reward ratio. You just like to go long or you like to go short of the market. It's more of a response, you build your position that way. And I'm not going to go into it now, but there's what I call 2 different approaches to trading, which everything fits into one or the other. So for some people it's just getting long or getting short, increasing a position maybe or decreasing. Okay, so that has led you, your playbook now leads you to what you want to do. Then we get to the crossover to the right-hand side of the circle, the third quadrant, which is the performance phase. This is where things really hot up. As we approach that, as we go to our playbook, it's already started to hot up. But this is where the performance anxiety comes in, which causes so much damage to people's trading. This is where they get in their own way at this point. They become nervous, they become anxious, they become fearful. They're going to do that because they're human beings, they've got emotions. Okay, reality is that we can't just be androids or robots. Okay, so even if a system's running the position, we're still anxious about how the system's going to perform. So this is where the real heavy lifting starts to happen during this approach. But you tend to have more confidence if you've been through that structure previously, if you know you've got a good process. So that process is in play, and that makes it easier to live with it, to live with the self-doubts, the behaviours, because you know you've got some sort of structure behind it. Now, you go through that third quadrant and you get to the outcome. Okay, this is where the magic really starts to happen if you can do it right. Because we have no control over the outcome. You know, we may have messed up the outcome by getting in the way. Okay, it may have been a great outcome. It may have been a bad outcome. Markets are random. You know, we may have a system that only works 20% of the time, but hell, that's where we make our money. You know, the richest guy in the world, or one of them, Warren Buffett, has only had 2 to 3% success rate on his ideas. You know, or you could be someone that has a kind of 80% hit rate, but you win small and tend to lose much bigger. Okay, but you have to deal with those outcomes and not personalise them, but you will. This is where we do something which Annie Duke in her book calls resulting, which is really a poker term, where you look at the outcome and then you start changing your behaviour at that point. You start adjusting it. Maybe you rush back into the trade, maybe you do a revenge trade, maybe a hope trade. You lose the plot which you had in the first part of that trade, the plan, the structure, the idea, the process. You come off process, and that's where you're more likely to go on to tilt. A tilt state as a trader is a disaster. Then you are owned by the markets. I call that the death spiral, and I think nearly every single trader will resonate with that death spiral. And that's really where the final quadrant comes in, the fourth quadrant, the letting go quadrant. Okay, that is the hardest quadrant to master. Okay, and that requires incredible mental skills and abilities, the ability to just get closure, you know, to give yourself a break, to not beat yourself up, to do what I call critique rather than self-criticising, which is what us humans tend to do. Okay, and then to just move on and reset and rebalance and start again. Okay, and that requires one of the greatest soft skills of high performance, which you would never think about being used in these sort of hard masculine testosterone-fueled environments, which is self-compassion. The very best traders are masters of self-compassion, at giving themselves a break and not beating themselves up. Or even if they do, because again, they're all human, they let go quickly. They put it behind them, they learn from it, and then they get back to the reset, which is an area we call the fertile void at the very bottom of the cycle, which is where you refresh, and you get back to that being state to start the next action, the next task, the next decision. That's the process cycle.
Wow.
And the idea is to try and stay present to it. So I talked about the 3 Ps. Purpose, process, presence. If you could be present to your purpose and present to your process, okay, then high performance is almost certainly likely to follow. So when we talk about this idea of presence, okay, the person I use in the book to highlight what the most present way you can be is Michael Jordan. Okay, there was a wonderful quote in the Netflix documentary The Last Dance by a guy called Mark Vancey, a sports journalist, who wrote about Jordan, who said that the separator for Jordan wasn't that he could jump high, shoot a basketball better, run faster than any other player. It was that he was completely present. And that was the difference. So when he would take a shot, he wouldn't be gripped by fear thinking, what happens if this goes wrong? What if I fail? He said those thoughts wouldn't come into his head. He would think, why would I worry about failing on a shot I haven't taken yet? Whereas most players, their head drifts at that key point. I call it in the book the two trading approaches, and that is a theory that I've come up with as a result of my work. And that basically says that there's two almost opposing styles of trading. It's really two different jobs. And it's not the easiest concept to sort of describe in a few minutes, but you can almost describe it as one of them has a very high win rate, but the losses when they happen are usually much larger than the gains. So it's purely a mathematical equation of making sure that the relatively small profits that are many aggregate to the few much larger losses, less of course the costs. And then on the other hand, it's the opposite. It's relatively few wins, but those wins have a much higher success rate than the many more numerous losses, which are usually much smaller. And again, it's about that mathematical equation between the two. And that's why that's why really understanding which approach you are, how that fits into your trading style is really important. You can't just go into it thinking it's about getting market direction right. You know, you don't just have to know what the Fed are going to do and where the market's likely to go. Most people know that with a high degree of certainty. You know, most people will make money when they're on a simulation or paper trading, because trading is not that difficult, okay? It's this mental side. It's why we say it's not the markets we have to conquer, it's ourselves. And that's really what the book is doing. It's how can we get to that way of performing and being as a trader where actually you can start to kind of repeat what you would do in a paper trading situation. So you become much more aligned to your process. Yeah, it's really just coming to this idea that, you know, trading is a performance activity. It's not an academic activity. I mean, there's a lot of academic input goes into understanding the markets, understanding price action, building trading systems and methods. Okay, but ultimately it's a performance activity. And the book builds on that the whole time. That's why it's the performance process cycle. Okay, it's all about performance. And it's all about that most challenging phase, you know, the performance phase. And when the performance anxiety comes into play. And it's really about how can you reduce that performance anxiety? Or even if you still have it, how can you understand it better so that it has less impact on your trading?